Nick, talk to us about what your take is on U.S. pension funds and our best options to invest in Africa.
Thanks, Rafael. First, I want to thank Hubert Denso for having put together such a beautiful roundtable. We are the World Pensions Council. We're a Paris-based international association of public and private pension funds. So our remit is more global, but of course we include North American and US public pension funds within our members. I want to start answering your question by building on what Cheryl said earlier. And she mentioned that roughly the sum total of assets owned by American public pension funds is equivalent to roughly $15 trillion, right? Mm-hmm. And that is 39 or 40 or 42% of the global AUM of all pension funds worldwide. So that's a huge figure. And up north in Canada, it's even more impressive because I think the GDP of Canada is 12 times smaller than the US. But if you look at the Canadian federal, provincial, and municipal public pension schemes, they represent 20 or 22% of the total AUM of the US. So that adds another, let's say another 3 or $3.5 trillion. And then if you add to that the UK, if you take British pension funds, that also adds another 5 or 6 trillion dollars. So what I'm coming at is, if you take the US, Canada, and England, if you take only public pension schemes, broadly defined, that's nearly 60% of the total AUM of all public and private pension funds worldwide. So that's a lot of money. So by focusing only on that narrowly defined group of investors, if these people in Ottawa, Washington, D.C., New York, Edinburgh, if they increase a little bit their exposure to African assets, that can move tens of billions of dollars fairly rapidly. So I think it's, in terms of advocacy, preaching, lobbying, it makes sense to talk to them first and foremost. And so I would really have, I would really stress that point. I think it's very important. And a second point that I would stress is that, of course, there are many asset classes. And without, playing the devil's advocate, I think, the least liquid asset classes, which are also the smallest in terms of assets invested, which would be, private equity, venture capital, or infrastructure. In Africa, they really represent a small percentage of the money invested by US public pension schemes. The vast majority of American public pension money going into sub-Saharan Africa and North Africa is going into bonds, of course, as John mentioned earlier, or listed equity. And really private equity, venture capital is really below, and infrastructure, what we call real assets, is really much smaller. Now the advantage of investing in infrastructure and private equity and venture capital in Africa is that it frees you from the biases of the benchmark. And of course, don't get me wrong, we suffer from the biases of the benchmark on Wall Street. So by being close to the S&P 500 or the Dow Jones, you are being biased, but it's even worse in sub-Saharan Africa. So the impact of the benchmark, if you're buying a listed equity, is terrible in Africa because it forces you mechanically to be overexposed to just 2 or 3 countries. So you think you're Pan-African, and in reality, you're buying, South Africa, Nigeria, and Egypt, and a little bit of Morocco and Kenya, and in many instances, that is your supposedly so-called Pan-African listed equity portfolio. Now this is the norm, but thank God, we also have the exception to the norm, which is that some pension funds and some asset management companies, which are not the rule, but they're in the minority, they take the liberty of moving away from the benchmark. And that is not common. So in most instances, the trustees, the administrators sitting on the board of the pension funds want to play it safe. So you have trustees, politicians, labor unions. They're kind of conservative. They don't want to take too much risk, and they would kind of tell the people running the mandate, stick to the benchmark, because in the US they're used to it, and they imagine that in Africa the same kind of investment procedure will work. Of course, it doesn't, and I was speaking with Kim and Joe literally as we were moving into that conference room, and I was pleased to learn that for the listed African equity mandates that they take the complete opposite view, and they have an anti-benchmark philosophy, so they give their managers a huge leeway to move away from the benchmark, not to be prisoner, quote unquote, of South African, Nigerian, Egyptian stocks, and really have a broad geographic and sector exposure, and I think that's a great thing. If I had one recommendation to make is like, you know, if you want to stick to the benchmark, you may as well buy an ETF or a passive tracker. If you're going for active African investment, be bold and really move away from the benchmark. I think that's something which is key. And one more point, and I'll conclude on that, is like there is more risk, of course, in buying private equity and infrastructure, but it is the future because, you know, beyond these short-term headwinds that John referred to, and of course we all see the pictures on TV of, you know, these riots and we all see, you know, the prices of commodities going down. But not only Africa, but Brazil. You know, Brazil 6 days ago, you had urban warfare in the middle of the most expensive part of Rio. So that can happen in Indonesia, in Brazil, not only in Africa. So these headwinds are there. They're like short, medium-term headwinds. I think the African story is a long-term story, of course, and you have demographic variables, sociological variables. So all the stars are aligned, and the long-term story in Africa is a beautiful story. And if you want to play that long-term story, you should play it across all asset classes, bonds, listed equity, real estate, yes, but also a little bit of private equity and infrastructure. I think, you know, diversification across asset classes, across all asset classes, is true in all markets, and all the more, I would say, in sub-Saharan Africa.
Thank you, Nick.
Doing business in Africa. You can't afford to be without Africa Investor.